Hey traders, I hope you're doing well. In this video, I'm going to be talking about one of my favorite PD arrays, the breaker block. In this video, my aim is to provide a quick and simple method for identifying and utilizing breaker blocks within your own trading. Let's get started. I'm sure most of you are already aware of what a breaker block might be or what it may look like as a pattern. There are some key pieces of information on how to properly identify breaker blocks. Number one, they require distinct swing points. Number two, they require a sweep of liquidity. And lastly, number three, it requires a candle or series of opposing candles prior to that liquidity sweep. When referring to swing points, this schematic represents what I mean. This is a drawing of a swing high on the left and a swing low on the right. Let me explain further with another example. On the left here, we have a schematic drawing of a bullish breaker block. The orange arrows annotate the swing formation we want to see. A bullish breaker block will have a swing low and then a swing high formed prior to the manipulation. The confirmation of the breaker block will be a candle closure above the swing high. Vice versa, for a bearish breaker block, we will see a swing high followed by a swing low, followed by the manipulation higher. Closure below the swing low is what will confirm the bearish breaker block. Here we can see that a bullish breaker block has formed. Let's ensure that we have those three pieces of criteria available to us. Number one, do we have distinct swing points? Yes, we can see the swing low followed by the swing high prior to the manipulation. Right here, swing low, swing high prior to the manipulation. Number two, do we have liquidity ran? Visible on the chart, we do have liquidity ran in the form of the swing low that began forming the breaker candles. But you also want to ensure that you have higher time frame liquidity tagged as well, whether that is internal or external range liquidity. Finally, do we have our opposing candles prior to the manipulation? Yes, we do. This series of up close candles in between the swing points will be your bullish breaker block. Here is a bearish breaker example. Number one, we have the swing points as previously mentioned. We can see the swing high followed by the swing low prior to the manipulation higher. Number two, we have our sweep of liquidity taking the swing high. And as I mentioned before, we do want it to tag into a higher time frame PD array as well. And lastly, we have our opposing candle prior to the manipulation leg, which is going to be this lowest down close candle here in between the swing high and the swing low. Highlighted by the gray box will be your bearish breaker block. Confirmation of the bearish breaker block will be closure below the swing low, annotated with the orange trend line. Now let's delve into the significance of breaker blocks. Breaker blocks are significant because they are the strongest institutional swing point. Simply, this just means that this is a strong signature in price action that confirms a change in the state of delivery. With it being an institutional swing point, we often will not see the market reverse without a breaker block swing point. These breaker blocks will thus set the stage for the reversal, as it is a true shift in market structure on any fractal time frame. And lastly, it is the highest probability confirmation one can have when confirming a reversal. Now we will go into the charts to gather some chart examples of breaker blocks and highlight their relevance even further. Okay, so we're at the chart now, and before we get started talking about some chart examples and breaker block relevance and whatnot, I first want to talk about a common error that happens when traders are identifying breaker blocks. We've talked about the importance of identifying the swing points and seeing the visible swing low, swing high before you have the manipulation, etc. But I first want to show you what an improper breaker block looks like. So here we can see that we have a swing low here, and we have a series of up close candles prior to a manipulation. One might think that this series of up close candles is going to be a breaker block on this 1 minute time frame. You would be incorrect. The reason why is because there is no swing high, right? You need a swing low, which you do have here, but you don't have a swing high. That makes this an invalid breaker block. Now, that's not to say that you couldn't go to a lower time frame and find a breaker block, but in this case, on this time frame, this specific series of up-close candles is not a breaker block. Moreover, even with this large up-close candle here, one might assume that this is a breaker block. We have our swing high, we have our manipulation, we have our opposing candle prior to the manipulation, but what are we missing? We're missing a swing low. In order for it to be a breaker block, we would need a candle to look like this. We need a swing low, swing high, and then a lower low. We don't have that here, rendering this an invalid 1 minute breaker block as well. Of course, as I said before, you could make a case for finding a breaker block on a lower time frame, but sticking to this time frame, there are no breaker blocks within this leg until you get above this high, which this will be a 5 minute breaker block. Okay, so we're just going to rapid fire a bunch of different breaker examples. As I stated, right, breakers are just a very strong institutional swing point. The markets most often do not reverse without a breaker block. So let's take this consolidation, for example, and let's just mark out some swing highs and swing lows, areas where we would have reversed within this range, this kind of range right here. Okay, so this is on the hourly chart. We're going to take hourly swing points. So let's take this guy, this guy. You can take this guy if you want. Here, 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 and let's start with that. I'm not sure about this one, but let's start with these, right? These are all just hourly swing points where the market turned around from the range high and the range low, okay? Even throw this guy in here. Now let's just look deeper. On the 5 minute chart, we'll pair the hourly swing points with 5 minute breakers, okay? And let's go all the way over here. There's going to be a breaker block at every single one of these reversals. So here's that low. What can we see? Swing low, swing high, lower low, closure above this high. You have your opposing candle as your breaker. So you have a breaker block at this area here. Let's go to the next spot. At the range high, what can we see? We can see the swing low, or rather swing high, swing low, higher high, closure below, forming your breaker block. Let's keep on going. Here was the next spot, I believe. It was this high here. And again, right? Swing high, swing low, higher high, sweeping the liquidity. Closure below this low. This series of down close candles is your breaker. This one, you didn't get a retracement back into it, but you closed fairly near it. You could have taken that. It was also at the end of the day, so not really the highest probability setup that you'd want to take. Let's look down here. I believe this was the one that we weren't too certain about. Oh, no, this one should be okay. Here. Same thing again. Count your swing points, right? Swing low, swing high, lower low, taking liquidity. This up close candle is your breaker block. Up here. Right here. Swing high, swing low, higher high. Shallowly taking it. Closure below this low confirms the breaker. You can see we get the closure below and it just kind of melts off the face of the earth. There's your breaker block there. You guys starting to see the significance of reversals and breakers and how synonymous they are with one another. Here it is again. Swing high, swing low, higher swing high, closure below that low confirms your breaker, which is these series of down close candles here. Here it is again. Swing low, swing high, lower low, closure above, series of candles is your breaker. And I believe we have one more. Now this one, I suppose you do have the breaker because you do have your swing low, your swing high, and your lower low. You have the pattern. Well, you have the swing points there, but you don't really have the candle. So this one could be negligible. As I said, it's not always going to be the case. If you go here, you could probably find it on a like a 3-minute. You'll find an up close candle. Yeah, right. It's not perfect. It's not completely mechanical. You have to kind of play around with your time frames, but here is your breaker. Right. It's really just the swing points, guys. Okay. So that's just taking random reversal points within a tight range, right? So we have our consolidated range here. Every single reversal point at the extremes is going to have a breaker at them. Now, what about a trending environment when the market is just expanding from external to internal to external to internal? Let's take a look at what that is going to look like. And we can see, right, let's get out of replay mode because that is bugging me. Just take this expansion here on the 4-hour. Let's just take these four. Okay. 4-hour reversal or continuation, 15-minute breakers. What do you see? Here's the low. What do you see get put in before the low? Swing low, swing high, lower low, closure above, 15-minute breaker. Yeah. Sorry, I'm going a little too fast. You have your expansion there. Here's your next 4-hour swing low that gets put in. What do you see occur prior? Swing low, swing high, lower low, closure above. This series of up close candles is your 15-minute breaker. Expansion. Here's consolidation. And then here we have our manipulation of the accumulation, tagging into a 4-hour POI. Here's the 4-hour low. What do we see prior to that low getting put in? Swing low, swing high, lower low, higher high, forming your 15-minute breaker. I think that is all the examples. Oh, here's one more. Just for kicks, let's do one more. 4-hour swing low. What do you see? You guessed it. Swing low, swing high, lower low, closure above on the 15. Series of up close candles, 15-minute breaker. What's the result? Further expansion. So hopefully you guys get the point and you see the power of breaker blocks, their significance, and hopefully when you are trading reversals, you will wait for a proper breaker block to form. It is the highest form of confirmation, as I suggested, and you could see it in these examples. These are not cherry picked. I could go through any of these. I urge you to do it yourself. Don't take my word for it. The breaker blocks are going to be your strongest confirmation tool for confirming reversals. No cap, no bullshit. It's 100% going to be changing your trading if you utilize it in this way. Let me know what you guys thought. If you guys enjoyed this video, this simple method of teaching, let me know. And I hope you guys enjoyed. If you did enjoy it, leave a like, comment, subscribe, whatever. Just let me know some feedback, and I will see you guys in the next video.